Good morning, everyone. Marty Mazzora, January 28, 2019. Thought this morning, in light of the big decline, Dow's down 380 as I speak, that I'd come right back to this chart that I updated for you just a couple of days ago and talk about some of these technical levels and a little bit about what the news is telling us this morning and what that implies for the market in the near term. So we looked at this chart on Saturday, a couple days ago, and here's that big nice move on Friday, closed a bit off of the highs. And here we gapped down this morning. And as I said, it would make sense to consolidate above this 2630 level, and we are testing that this morning. Right now, in fact, the S&P is just below it, 2629. This particular chart actually is delayed a few minutes. So we're really testing that level right here. Now, I can tell you that it's been my experience that if you look at something that has been this important for more than a year here in terms of support, if it were to lose that support and come back down here, we could see the market quickly move down to 2600 and even below, and then we'd be looking at perhaps a new trend line with a more realistic angle that I illustrated on Saturday. And of course, we could always come down and test this December 24th low, which lots of folks still expect is very much in the cards, just needs a catalyst. So this morning it was Caterpillar reporting an earnings miss. Actually, revenue was better than expected, but earnings were down. They, of course, cited the trade war, tariffs, slowing in China. In fact, also, of course, updated today were their global sales numbers, which is actually part of our macro index. Worldwide sales are still growing at about a 10% clip, and that's good. So it's still positive, although it's declining. It's definitely a downward trend in terms of sales growth. Asia dropped all the way to a 3% increase, still increasing, but at a very low rate. North America, 14%, which was a decrease. Sales actually improved in Latin America, up to 17%. And then the Europe, Africa, and Middle East region is growing at a 9% clip, was just slightly off of what it was before. So we've had extended periods where Caterpillar actually had declining sales worldwide. So the fact that it's still growing still is a positive in our index, although we're paying close attention to the fact that that growth is waning. The other thing this morning was NVIDIA, one of the world's largest chip makers, real big in the gaming space, big in the cryptocurrency space, and of course, very big in China. They had a disappointing fourth quarter and they lowered their guidance going forward. They made serious mention of the slowdown in the Chinese economy and, of course, the slowing growth in the global economy overall. By the way, Caterpillar, which is an iconic US brand, 59% of its business occurs in other markets. So folks, again, more evidence as to why we here at PWA do not like the protectionism that we've seen of late, and we think that the trade war ending sometime soon would be very bullish for the market as long as general economic conditions hold up. Problem being that general economic conditions are waning the world over. So these things need to be put to bed sooner than later if this bull market is going to continue and then mount its ways to new all-time highs. Of course, we have those talks this week. Those will be very important for 2 days. Don't expect a resolution, but we do see lots of incentives on both sides to get this thing at least kicked down the road, put to bed, what have you, but off the table, and a rolling back of the new tariffs that were instituted here last year. So I'll be listening to the Caterpillar conference call this morning at 8 o'clock. That's where we'll really be able to get some in-depth insight into what they're thinking and what they're seeing the world over, as Caterpillar is a big global player. Like I said, so important that we include their sales data as one of our 86 data points in our macro index. So folks, again, from a technical perspective, we are looking right now at a key level, 2630. We're sitting right on it right now, 2630.55. It would make a lot of sense to me to see that get penetrated in here. And then one last thing about this week is that it's the last week of the month. It's been an interesting phenomenon, and I read from a couple of analysts this weekend who've been tracking this. They've been seeing some monthly rebalancing the last few days of a month, meaning particularly when you have a good month, and January has been a good month, funds will rebalance. They'll have to sell equities to get down to their target and buy fixed income. So I think 10 of the last 12 months that were good, we actually saw stocks decline into the close of the month. The fact that I'm reading about that statistic means that lots of traders are paying attention to it. So this would be the week. If you could get a catalyst like weak Caterpillar earnings or a warning from NVIDIA, the last few days of the month, that would help exacerbate that decline that some people are expecting. Again, this 2630 level, very important. We'll see if it holds. Not critical that it does in the longer term scheme of things. What's critical in the longer term scheme of things is that the global economy not roll into recession, and that demands that we get this trade stuff off the table soon. Thank you as always for watching and listening. There'll be much more coming your way this week. Hope you have a great day. Bye-bye.